Good evening, all. It's Sunday night. Hope you had a great weekend this weekend. Excuse me. This is going to be the second week of 2007. If you remember correctly, last week we talked about the first 2 weeks of 2006 and how crazy they were, and that's basically what we're experiencing this year as well. Last week was a very short week. It was a 3-day week basically, because Monday was the market was closed for the first of the year, and then on Tuesday the market was closed for President Ford's funeral, which made a very nervous market because it is such a short week. Now, we have a few more factors that are coming in right now. First of all, oil prices are taking a dive, which is a great thing, but we have to see how the market is going to digest that. And then the other thing is Democrats actually took control of the Congress, and they have an agenda. They have basically the first 100 hours of work. They're going to try and pass quite a few new laws that are different, and the market needs to digest that. It needs to see how the power struggle is going to work and who's going to win and so on. So that's one of the reasons why the market is so confused right now. But the other reason is just because it is that time of the year. The first 2 weeks of the year are extremely confused. The market just needs to find out which way it's going to go for the rest of the year. I do want to show you the 30-minute chart, just to show you the type of volatility we experienced this week. On Wednesday, we opened up, gapped up, went straight up, and then the market basically ran out of air and then just fell apart, and then came all the way back up. So it's not really a fundamental change that really happened. It's more traders trying to grab their footing when the market just opens in the new year. Then Thursday we went up, and then Friday we gapped down and just went sideways. Now, as you can see, over the last 2 weeks we've been trending up, but haven't really gained anything, not much, but we have been trading up. So on the short-term basis, I do think we're going up. If you look at this resistance level, the 1788, 1790, or the 1800, which is up here. If we break the 1800, 1790 or so, the market could show a very quick move up, maybe even up to the old highs, which could catch a lot of people off guard. On the other hand, if this move gets tired and we break below the 1770, if tomorrow you're going to see the market breaking below 1770, this whole momentum is going to change, and we're going to start seeing the market looking for a different direction. INDU is very different than the NDX lately. Let me show you the INDU on a daily chart, and you can see it's still in the same channel. Still just drifting up, no swings, no waves. The moving averages are basically straight, evenly spaced. They are just pointing to the moon and going at it. So the industrial average is very, very different than the rest of the market, which we tend to focus on, which is the NDX 100, the top 100 stocks in the NASDAQ market. As for the rest of the week, as far as the industrial average is concerned, I'm seeing some more on the upside. There's no reason to bet against this market as long as it's drifting up. Notice there's no lower tops. These are all higher tops, higher tops, higher tops, and an uptrend is a series of higher highs and higher lows. This is still a series of higher highs and higher lows. The uptrend itself on the industrial average never really broke. We have quite a few positions on the short side right now that are working pretty well. If you look up in your charts, for example, Netflix is one of our shorts that's working really well. Let me go back to the NDX, and we see that every time the market reaches near a top, we see that some stocks start working very well on the short side, but they are abnormal. Most of the market is still moving up, moving sideways, but we are starting to see some good stocks on the short side. If the market breaks the 1770 and then subsequently the 1750, we're going to go pretty heavy into the short side. We're going to short basically across the board. It's going to be a very much of a confirmed downtrend. It's going to be a lower top right over here, and we're going to short across the board. It should be a very nice long-term payday. We can basically retrace 50% of this, so down to about this level, the 1645 or even lower. On the other hand, if the market breaks to 1800, we're going to close all of our shorts. We're going to get out of the short side altogether. We're going to start looking for stocks that are either are late to the party, stocks that are forming bottoms and looking to fly up, or stocks that are near their highs and near resistance levels and are looking to break out. So that's the two plans for this week. That's what I'm going to be watching for. Tomorrow I'm going to take the day to just evaluate the market and see what the market itself wants to do. And the market is the boss, not us. We're going to follow whatever the market is going to do. Anyway, have a great week, and we'll release another one next Sunday. Take care.